Thinking about ESG investing? 6 pros and cons to keep in mind. Investors who are concerned about environmental and social issues like climate crisis, gender inequality and more often opt not to put their money in companies that aggravate these problems. On the contrary, they may want to explore businesses that can not only help grow their investments but also are staying on top of these issues. My name's Sage for Kalkine Media. Please subscribe to the channel. And that's generally what ESG investing is all about. In this video, we'll explore more about ESG strategy. The Environmental, Social and Governance, or ESG strategy, implies a sustainable approach to investing your funds in companies that strive to make a positive difference. This strategy can maximise portfolio risk tolerance and provide significant returns in the long term, while also supporting a positive movement. Companies having high ESG ratings are likely to have long-standing advantageous positions. However, there are also risks involved, so it makes sense to know those along with the benefits before getting knee-deep into ESG investing. The following are some key points regarding ESG that will be helpful if you are planning on taking this approach. Advantages of ESG investing. Long-term opportunities. There is a misconception that one might have to compromise on returns by allocating their funds in sustainable and socially responsible investments. However, ESG is a value-based method of looking for companies that are likely to stay profitable in the long run, minimises risk. Focus on ESG policies generally help companies avoid immoral practices and inefficiencies that could affect their image and performance. And also, as ESG investments represent long-term profitability, they can help diversify your portfolio risk. Significant returns. ESG companies, aside from quarterly gains, are also known to take note of their profitability in the long term. This perception helps them attain significant organisational growth and steadily increase profitability over the years. Risks to keep in mind while ESG investing. No standardisation. There are no standardised metrics for ESG compliance. Independent ESG agencies lack uniformity as they weigh ESG factors according to their own terms, while companies in most cases self-assess and report their ESG work. Possibility of deception. Corporate social responsibility, or CSR, and other reviews generally reflect the company's ESG targets and accomplishments, but some companies may still slip out by giving misleading information. Limited choices. A handful of companies pass ESG metrics, giving investors limited options to choose from. And if any company fails the ESG standards, the selection pool for investors shrinks further. Thank you for joining us. Now, if you do like the information, let us know by liking, sharing, commenting on the video below. Subscribe to the channel, press the bell icon. You'll be notified of the most recent videos from Kalkine. For more articles, we update the website regularly. It's kalkinemedia.com. My name's Sage for Kalkine Media.